Everyone, today is Sunday, the 24th of February 2013, and this is Brian Shannon from AlphaTrends.net. I want to take a quick look at Apple here. I was looking at the Apple chart this weekend, and we're obviously still in a clear downtrend. Best case you could say is it's trying to find some support here, but I consider it still guilty till proven innocent with a declining 10, 20, 50, 100, 150, 200-day moving average, etc. What we've seen here since the beginning, since the earnings, that the volume weighted average price is right up here at about $459. Now I'm looking at a scenario here where we could maybe continue to bounce a little bit. Let's take a look at the 10-minute time frame. We've just come from 485 down to about 442. We're at this trend line right now, which might get a little some people excited if we get back above that. But I think that the biggest we're likely to see for a bounce in here, or actually for this scenario to unfold, would be a rally up towards about that 458 level, which would be a 38.2% retracement of this move. So this is 38.2%. Up to here would be a 50%. And that's 61.8%. But this 458, 459 level comes in as a level of interest, not only because of that retracement, but when we look at the volume weighted average price year to date, it's right about that 458 and a half, 459 level as well. So here's a scenario I'm thinking might unfold is if we take a look at this as maybe a measured move type thing, we get a 38.2% retracement up to the volume weighted average price year to date, and that would create a B to C leg. Here we see this A to B and then a B to C. Well, then a measured move, we would take the height of this, which is 485, up to this from this height here down to the recent 442. So that's a 43-point decline, and we would subtract it from about this area here at 458. So 458 minus 43 points would give us a price objective near about 415. Now, the interesting thing there is when we look at the daily chart a little bit further back and we look at the volume by price, you can see that we had this gap over here, obviously, that hasn't been completely filled, and I think it's likely that we not only fill that gap, but we come down into this little zone right in here. Now, this zone is about 415 to 425, and that's where we still have this hole basically on the volume by price over here on the right. What that means is basically that very little volume traded in there, so there's not likely to be a lot of support. Let's kind of zoom that in a little bit here, and we can see that really no volume trade in there. So it creates that air pocket that makes it easier for the stock to continue to decline down towards that. So what I'm thinking a possible scenario is that we can get a little bit further bounce, perhaps up to about 459, and then we begin that next leg lower that gets us down towards that 415, 420 level. From there, possibly the stock has the ability to find some support and bounce a little bit. It is these highs from the fourth quarter of 2011 as well. So it's just one potential scenario for Apple. It's clearly still in a downtrend here, and I don't think it's time to be accumulating for longer term positions, as I believe a lot of people are probably doing in here.